what that long question is really asking is, should I be using pre and post market data, or should I not be using it? You should not be using pre market data. And yes, if you do, your moving averages are going to be off throughout the normal part of the day. Okay. So why do I not want you using pre-market data? Because the market itself does not use pre-market data. When you check the prices of a stock at the end of the day, you're going to see where it opened, where it closed, where the high price was, and where the low price was. And no pre-market data is in that data. So it's possible to have a stock trade higher than the high price of the day in pre-market, but throughout the day, it doesn't even reach that price, and it will not get incorporated into the official numbers. So you don't want it incorporated into the official moving averages either. All right. So I hope I've correctly. I hope you understand my response to that. Yes, before I left, I was talking about the 90-10. Yeah, I'm pretty much finished with that, guys. I just wanted to mention that it always surprises me that, we've got 500 people here, but, basically it usually falls around 80-20. There's that 80-20 rule where 20% of the people show up, So would I wait after the 20 MA halt to take the uber long after the dual space? No. So what Patrick is asking is, would I wait for the move up and then the catch on the 20 to take the play? No, you can try the play from dual space, right? So you got duals. Here's your you want a powerful sign from this dual space position, right? And the most powerful thing I see is that bottoming tail bar. All right. So if you wanted to try buying above the bottoming tail bar, give yourself the bottoming tail bar, stop out there, and that's a reasonable risk. Remember, you have to make sure your risk is reasonable. If you can live with that, if that's just a little tiny pinch for you, a little ouch, but it's not the end of the world. It's not going to cause you to seek counseling. All right. Then you can try that. And then this would be your second play, right? All right. So nothing wrong with that. Can I look at Oracle? Let's take a look. It's one of those elongated drops here, but look at your narrow state. And you go to wide. All right, now I'm going to go back here. All right, let's talk about this. I want you to look at the difference between my drawings here. That looks like railroad tracks. But this, right, that's railroad tracks. You see the kind of parallel move to the downside. That's a power trend, right? That's a power trend. Okay? You never want to bet the other way against a power trend. But look at this. Boom. See? You see that move away from the parallel portion? That's your climactic move normally. Okay? Now, if you look carefully, there were moments, but for the most part, Oracle is parallel moving. Okay? You really want to be careful about betting against a parallel move with the 20-period moving average like that. So it's better to just stay with this flow to the downside, getting in on colors, taking profits on brief moves away, getting back in on color changes, what have you. But Oracle had definitely just a beautiful, basically all-day move Here, you don't have the dual space. You have the one space, right? So this can be more of a rest that leads to more downside. All right, you got one level of space here, not where the stock separates from the 20 and gives you two spaces. You don't have the dual space there. Now we got somewhat of the dual space here, not a lot of it, but you got some where there was none here. All right. Yeah. The other thing that I will bring to your attention is that this can help you to be also weary of certain plays. So if you're getting a buy signal from a dual space position, you got to be leery of that, right? So if you're getting a buy signal here, right? So let's say you're getting a buy signal there, and look how wide the stock is separated from the 20 is separated. You got to be leery of that buy signal. You know how many traders bought this new high right there? I'm telling you, a lot of them, because many traders just have this rudimentary approach of buying new highs. They don't know that 70+% of all new highs fail. Like, look how many failures you have. Look at this new high. New high, failure, right? Now look at this one. New high, failure. Okay, so when you start to combine these concepts of like, why would I buy this new high that is this far from the 20, where the 20 is that far from the 200? I am closer to closing the width, right, than I am going higher. Does that make sense, traders? Does that make sense? So you see how the concept can help you know, like, I shouldn't be thinking about buying from a wide state up here. All right. What are your best new highs from something like this? Like if your stock moved to a new high there, wow, that can flow. But from here, no. Okay. Now, uh, a what if your stock, right? Check this out. What if your stock has a narrow state and opens the day up here, but so it gapped up, right? So I'm going to put this here. It gaps up in the morning, but that gap is born from a narrow state, right? That's okay. This can still go because it was born out of a narrow state. However, if your stock gaps, here's the 20, here's the 200, and your stock opens here, that gap is born from a wide state. This will have a tendency to reverse. That gap will have a tendency to fall back. Does that make sense? Does your gap, is it born from a narrow state or is it born from a wide state? All right. Very important concepts here. Guys, this is not 101 stuff. This is very esoteric, deep knowledge stuff I'm sharing with you right now. And you won't find this in a book because these are my concepts. All right. I'm not regurgitating stuff I've read to you. I'm not regurgitating stuff I've learned from somebody's course. This is 40 years in the market. All right.